first one to me, and it's long, is the section on sources of information. This is a tough one to study for. And I added a new slide on here. Note about this section. This is not the easiest section to study for. Yeah, this is not the easiest section to study for. So hit the high points, which I've kind of done on the PowerPoints here. You'll have to kind of use your judgment on a lot of this. You know, it's called sources of information. So you can kind of reason your way through a lot of this. You know, your questions will end up being things like, you know, which of the following could you maybe find in this county record, or where would you look for this? And you just kind of reason through the multiple choice. Well, it obviously wouldn't be that. It probably wouldn't be that. It probably would be this random source of information that I've never heard of, but it sounds like it would be. You know, you kind of have to reason through it that way a little bit. But you know, this is one section out of many, so there's, you're not going to get just tons of questions from this. You'll get some. It's just the harder one to prepare for. So let's see some of the high points. So we got public records, publicly available information, and we got non-public records. And there are differences in those things. So public records are things that a governmental agency has to keep by law, but they're not necessarily all publicly available. You know, birth records, for example, would not be publicly available. Publicly available information are things that have been prepared, kept by law, that people can access. Great example would be an SEC report. All right, non-public records are just private things, confidential, obvious things. Tax records, you can't just go grab anybody's tax records. Banking records, credit records, phone records, personal health care records. You know, HIPAA protects against those types of things, the personal health ones. These are private and confidential. That doesn't mean they can't be obtained. It just takes like a court order or something like that. All right. All right, so then it goes into a few of these different acts that protect certain things. So we have the Freedom of Information Act, and this is the big legislation that governs the availability of governmental records to the general public. The types of records that might be maintained, they're allowed to be maintained, the conditions upon which they can be disclosed to other governmental agencies, circumstances in which an individual might obtain the information. All that's kind of governed by this big piece of legislation here. And generally speaking, governmental information about an individual is prohibited from being released. Exceptions are not tax records, but tax rolls. You know, like you know, the property tax rolls and things like that. Voter registration, you know, assumed names, real property records, divorce and probate suits. These things can be available. It's easier to kind of remember the big ones that are not. Banking records, credit records, telephone records, those things we mentioned up here. Tax records, banking records, credit records, phone records, personal health records, passenger lists, stock ownership. Those are not public. That's the easier thing to kind of remember. Things that are not public. Some of those other random things are. We have the Fair Credit Reporting Act. This limits access to information, and it generally requires consent of somebody before someone's able to access their consumer or credit report. There are certain reports exempt from this if there's an employee misconduct investigation going on. But the Fair Credit Reporting Act basically regulates what companies are allowed to do with consumer information. All right, so we've got the Freedom of Information Act. We've got the Fair Credit Reporting Act. Those are high points of this section. We've got the Fair and Accurate Credit Transactions Act, which kind of expands on the Fair Credit Reporting Act that we just talked about. It exempts certain reports that are involving those employee misconduct investigations. And kind of actually mention that up here to kind of keep it all together. But now, added a second bullet point there, an employer who engages a consumer reporting agency in connection with some kind of workplace investigation does not have to obtain prior consent of the employee if the investigation involves suspected misconduct. So honestly, I kind of had that all kind of contained on this slide with this little bullet point to the side here, but that little exception there in the parentheses really is something that came about from the Fair and Accurate Credit Transactions Act. Not that that really matters. Really more matters about knowing that little rule. The Graham-Leach-Bliley Act. Under that one, must tell customers about their privacy policies, must notify customers of private information they intend to share, and they must give customers a chance to block such information sharing. So you've probably received mess like that in the mail from different organizations about their privacy policies, and we will not share your information, blah, blah, blah. These rules have been interpreted to prevent them from selling credit header information, so that's just basic personal information such as names and addresses and phone numbers. That prevents them from doing that. So that's the Graham-Leach-Bliley Act. Other privacy acts, and I didn't note what every one of them is, but something to just kind of to glance at, but they all kind of hit the same thing-ish anyway. The Right to Financial Privacy Act prohibits financial institutions from disclosing financial information without customer consent or court order. Here's that. This third bullet point's its own little specialized area that's worth noting, though. You can kind of just remember GDPR, General Data Privacy Regulation. This is all about the European Union, very specific. So this governs collecting and processing personal data of European Union countries' residents. All right, so that applies to any company, anywhere, if they're collecting and processing data involving EU member country residents. So that's a pretty important little bullet point there. HIPAA down at the bottom, we've talked about before. It's obviously important. Restricts access to protected health information and payment information. So you can't disclose any of that kind of stuff about, what kind of private information about somebody's health. So that applies to doctors and optometrists and anything like that, right? And then I started doing something here, and that's kind of where I forgot to delete this slide. I kind of bounced back up here instead and just said, let's stop noting all this stuff. We could go on forever and ever about these types of records. Just kind of use your judgment on those. It's a tough little deal to study for. There's a lot of little oddball things there. So that's my advice on this section. Don't try to memorize what all of these random county records are and municipalities and what they collect and where they collect it. There's too many of those weird things. Just use your test-taking skills and you can navigate through those no problem. So that's my advice to you on that section. Questions or comments? All right, so data analysis. Sorry, I'm so used to saying data analytics these days. Data analysis and reporting tools. This is an easy little section, actually. Stuff you're kind of familiar with probably in kind of your daily life. Some of it not, like these phases of the analysis. These are the kind of things that just bore the heck out of me, learning these phases and what's in there. But man, do they like to put little test questions about, hey, they're doing this. Is this part of planning, preparation, testing, interpretation, or post-analysis? It's kind of useless questions, but they sure do like to ask those things. So, they might put a little scenario where the fraud examiner has undertaken some kind of method to cleanse the data and get rid of things that need to be rejected that are errors or whatever. They did this as part of the which phase. So you have to know that's part of the preparation phase, right? So, they tend to really focus in on planning and preparation. So the planning phase is where you are doing, pretty obvious things when you look at it. Understanding the data, that's part of the planning, right? Defining your objectives, figuring out potential frauds that could happen, determining whether there's predication. That's definitely part of planning. If there's no predication, then you don't go further, right? Here you're determining where predication exists. That's where you need to focus your attention. All right, so that's the planning phase. Preparation is getting in there and doing stuff now, right? Getting the data, identifying it, obtaining it, verifying it, cleaning it up, normalizing it, making sure it's all relevant and reliable. So you're getting it kind of organized and ready for the next phase where now you're actually crunching numbers. And then post-analysis is looking at everything. So planning and preparation is where, in my opinion, tends to be the high points for test questions. Structured versus unstructured data. These are just definitions that can come up. Structured data are things that you would find in like a database, predictable structures, recognizable things, payment details, expense reports, financial reports, sales records, things like that. Whereas unstructured data is just, exactly what it says. It's unstructured. It's not in a database. It's not in a spreadsheet. Would be a better way to think about that. Like emails and files and vendor invoices and social media activity. This is unstructured data. It's messier, right? So, the point to this is different analyses would apply to structured versus unstructured data. Data mining, we're all familiar with what that is. You are looking at large volumes of data and trying to crank out certain analyses of patterns and things like that. Computer matching, aka data matching, is a use of a data mining technique involving comparing data sets to identify overlaps. A data warehouse is exactly what it sounds like it is. It is a repository of data. So just a little bit of definition type things here. Data analytics. I don't feel like this slide is nearly as important as the next one, but I left kind of some of this stuff in here anyway. I don't think we have to commit to memory what data analytics definition is. We know what that is. So I'm kind of wasting time putting that on there, but you're analyzing data and drawing conclusions from it. It is very important to helping a fraud examiner determine predication, red flags, something's up, and then that's on the basis on which the fraud investigation begins. Ad hoc testing, one-use point-in-time analysis conducted for a specific project or exploration, such as fraud investigation. Repetitive testing is something that you repeat. It's predefined, it's automated, you do it on a scheduled basis. Continuous testing is, just like it says, a constant automated monitoring effort, just embedded in there doing its thing. Just kind of a series of little definitions that might pop up on this slide. Like I said, not nearly as important as here's the good stuff. This is where the meat of the questions probably would come from. Benford's Law is one of the coolest things in the world. I don't know if y'all have any experience with that at all. I love it. When this was once upon a time when I did, instead of this class, a fraud analytics course, this was like one of my favorite days. Benford's Law. Somebody back in the day, long ago, developed probabilities of how often will the first digit in a number be a 1? How often will the first digit be a 2? How often will it be a 3?
That's amazing.
It's
actually like work that way.
Yes. Yes. So if it is, and it only works on naturally occurring numbers, all right, not human-made numbers. It would work on, any kind of. So like in the fraud analytics course, I had the students in their minds and actually on paper fraudulently write themselves fake checks. Like write yourself, a series of 10 different checks over time. Just, make up some numbers for yourself. And then we did a Benford's Law analysis on that. And I said, these are completely fake numbers because they weren't naturally occurring. They were human made. And the probabilities that one would be there 30% of the time didn't fall in, it didn't fall out in the numbers. They were all over the place. So as an alternative to that, I got maybe like 3 months worth of checks that my wife wrote in her business. I said, let's apply it to this. And it was perfect. Yeah.
Really?
Yep.
So it's really works.
It really works. It's so cool. Yeah. So it only works on naturally occurring numbers. It wouldn't work on things like social security numbers or vendor numbers or government ID numbers or, you know, things like that that someone creates, but it does work on naturally occurring
I
numbers.
can't believe this actually works.
Yes, it's so cool. So Benford's law, you're analyzing the frequency in which a digit occurs in those naturally occurring numbers. It's so neat. And of course, there's software that'll crank it out. We didn't have it, so we just kind of did it through Excel. That's kind of helpful to understand a little bit of what works under, you know, behind the scenes and cranking the numbers out. It's so neat. I love it. Let's see. Link analysis kind of is there's an example of this in the text showing, you know, this little, I guess, a chart, I guess you could call it, but it's a visual representation, chart, with lines kind of showing how things are related, you know, data from multiple sources. It's just a way to visually represent and see where things are coming from, where they're going, and it's good to show indirect relationships. And it's kind of helpful in investigating shell companies and kind of fleshing out money laundering techniques and things like that. So that's called link analysis. We know what correlation analysis is. We're looking for relationships. Gap testing, you're looking for, and it's a very descriptive term there, you're looking for missing items or gaps in a sequence. Or as an alternative, you're finding sequences where none are expected to exist. So it'll kind of hit either of that. The join function, you're combining fields from two input files into a third file, and you're basically matching data in a transaction file to a master file, such as payroll records would work. You know, the payroll master file says we should be paying this to this person, this to this person, and the join function will kind of link all that up to see. Compliance verification is determining whether company policies are being met. So they might have a limit on certain expenditures, and this would be a quick analysis to see if those limits are being observed. So, you know, that's kind of the meat of this section. Those last two slides to me, that tends to be where they really ask questions. And really easy, basic questions. Notice we didn't go into very much detail at all on this. That's the extent you really need to know to go through this test. Basic, broad definition question would be something like, hey, we're wanting to figure out if employee payroll records are kind of jiving with the master file. What would we want to employ to do that? And it would be the join function, you know, something like that. We want to figure out if there are missing items from this series of invoices. What would we do? Gap testing, you know, stuff, real simple things like that. So that will be that section for you. Questions or comments? All right. So yeah, in the fraud analytics course, we got to do some of this stuff, and it was fun. I'd like to bring that course back at some point. Digital forensics. The high point to this is really tends to be properly securing evidence, digital evidence, making sure that you don't mess it up. All right, let me do this last slide first, this last bullet point. One of the main ideas of this section is digital evidence is really different type of evidence from tangible evidence. It just is by its very nature. It's easy to screw it up. It's easy to try to get it and preserve it and just completely mess it up. And there are tips on the best way to secure that type of evidence. So the point to this section is, yeah, digital evidence is very different, but if you get it correctly and preserve it correctly, the admissibility of it in court is really no different from admissibility of any other type of evidence. All right, so tips for seizing that type of thing: make sure, of course, that you have the legal authority to do it in the first place. Do you have a search warrant or whatever? If you're on the scene and you need to remove it, but it's not practical to do that, copy or image the items of evidence. Get all suspects, witnesses, bystanders from the proximity of the evidence. Get them out of there. Keep in mind of remote access capabilities and try to control that. This fourth one is an important one. Generally, data should not be analyzed on the machine from which it was collected. We want to preserve it the best way we can, so we need to figure out a way to make forensically sound copies. You don't have to get into the nuts and bolts of how to do that. You just need to know that that's what you need to do. If the computer is off, don't turn it on. If the computer is on, don't turn it off. Don't screw around with stuff. This is kind of the point to this. If there's a formally trained computer investigator on site, then you could consider collecting volatile data live. Only if it's volatile, though. But in general, yank the plug out of the wall. Don't use the computer and don't search it for evidence. If you know that, you're pretty good to go on this section. Other types of questions that would come from this section would be common sense things, and they might hit up on how difficult it is to collect data from the cloud, because you can't get at it. It's remote and it's not as well controlled, and people can get to it and do this and that and the other. So it's a pretty easy section to kind of navigate through. Threw this one little word on there because I thought it was a fancy word. Steganography is hiding a piece of information within an apparently innocent file. So there's a word for that. So you can impress your friends with steganography. And that could be an easy test question. So it's worth hanging on to. So easy little section there. A lot of common sense stuff. Tracing illicit transactions. This was longer. So what are we talking about? We're talking about ways that we can search for evidence to show what has happened to property. We're documenting the movement of assets in and out of accounts, and we want to do it to facilitate recovery, but we also want to do it to determine if they can pay a court-ordered sum, if a judgment's ordered, etc. We need to know where stuff is. A little bit about financial records. Financial records are important, but they're not available to the public. We already mentioned that back in that first section, so it might be difficult to obtain those things. We could, if we can always get something if somebody consents to it, the customer consents to it. Otherwise, we need some kind of court order, whether it be a search warrant, subpoena, or maybe a discovery request in a civil trial. But for the most part, yeah, they're really important, but can't always get them. So we need more indirect methods of figuring stuff out. So a direct approach would be just looking at specific transactions. Indirect approach that we're often stuck with is going to make us prove things circumstantially, such as figuring out a way to prove that whoever we're investigating has been living beyond their means. We could prove that, or at least provide evidence of that. I shouldn't say prove, but we're working towards trying to prove it. A summary of their assets and saying, look, here's what this person has. There's no way that that person could have all this unless something's up, So we would use this type of approach when we can't get their books and records. If we suspect that, we may have their books, but we suspect that it's not reflecting everything. We might do this if the subject experienced a significant increase in their net worth, or significant change in their gross profit percentage, or expenses exceed reported income without cause, just kind of crunching numbers and saying, something's up here. Or if the subject has large amounts of income from unidentified sources. So this is us trying to kind of trace things indirectly. So there's different methods we can use. There's the net worth method. So if we're trying to prove illicit income, we could try to make a case that this person's assets or their expenditures, if they're not keeping what they have, for a given period exceed what could possibly be accounted for from the income that they are known to have had, honestly. So the theory behind this is real obvious, but it's that income can be determined by increases or decreases in net worth, adjusted for living expenses, blah, blah, blah. We know this type of thing. We're accountants. So how do we figure out the assets and liabilities? Surveillance, interviews, real estate records. There are different ways to do it. But all this is kind of based on the fact that you can either save income, buy assets, pay off debts, or spend it. So we can kind of look for evidence of any of that type of thing. There's an asset method and an expenditures method, and either, these methods work under different circumstances. A lot of this stuff is just different ways to do different things under different circumstances. The asset method obviously works best when they have assets, right? They've invested their illegal funds to accumulate these assets, this wealth, causing their net worth to increase. But if they're spending it, then we got to get at the expenditure method. Figure out, all right, this person has been doing all this stuff, travel, entertainment. So if they don't have assets to observe or talk about, got to go with the expenditures, right? And I just dropped a couple of little things at the bottom here. Building a financial profile of someone, that would be a financial statement about an individual. A behavioral profile would be another thing we'd like to put together as evidence, showing information about their personal characteristics. They wear expensive clothes. They have all these club memberships. They have all these expensive furnishings and cars, and they do all these expensive leisure activities. Circumstantially trying to make our case that something is not right with this person. All right. So that's all the net worth method. The bank deposit analysis method is trying to compute income by showing what all happened to their funds, based on the theory that they're either depositing money or spending it. So this works when things are being deposited, obviously. If they're not depositing money into the bank, we can't analyze their deposits, right? So, if you're depositing $100,000 in the bank, but your income's 10 grand, it's good evidence, right? And then some various kind of random things I wanted to note. Piercing the corporate veil. This is the idea of, we know the characteristics of a corporation. The corporation is separate from its owners. Well, piercing the corporate veil, that may be disregarded if the corporation is being used for fraudulent or illegal purposes. You can't get away, you can't say, oh, that's the corporation doing that. No, you are the corporation. You're in trouble. Mutual legal assistance is countries kind of cooperating with each other on law enforcement matters. Letters rogatory are formal requests that a court in one country seeking judicial assistance from a court in another country, and it's customary to use when MLA is not available. These can be used in criminal and civil matters. I don't know, I just kind of thought maybe worth adding to that last slide. I don't know if those would show up in a test question or not, but it could, so I put it on there. So those are the high points to me on that section. And then we wrap it up with report writing. And this is a super easy little section. So this is documenting everything, and common sense, I think, for most of this. We want to document, we're doing this examination on fraud. Obviously, we got to document everything. We need to convey all the evidence. We need to do all of this to add credibility. We need to obviously omit any irrelevant information. We don't need this to be a gigantic document that people can't read because it's got too much junk in it. We just want relevant stuff in there. So that's our fraud examination report. There's an expert report that might exist, and this is provided by somebody who's going to be an expert witness. We've talked a lot about expert witnesses and the things they have to kind of go through in court. They're going to provide a report that's going to give information about their qualifications, their opinions, the basis of those opinions, and various other stuff that we've really already talked about. And I don't know if this third point's really that important, but the fraud examination report might be attached to this report if the expert used that report as a basis for forming his opinion. So these things can be kind of part of each other, because bumping back up to that second bullet point, what's in the expert report, their opinions and the basis for those opinions. So if the fraud examination report is one of the bases for their opinions, it needs to be in the expert report. Characteristics of a good report. We've mentioned this before. This is important and good to remember. Everything we do in a fraud examination, and definitely with the reports, everything needs to be prepared with litigation in mind, with the assumption that this is going to end up in court at some point, even if it doesn't they don't expect it to happen, because if it does, you are ready. The report should obviously be accurate. It should be clear. It should definitely be impartial, definitely be relevant, and it should be timely. Third one is extremely important. We don't want an opinion in there on guilt or innocence. That is not our job. We are not allowed to do that. We're in trouble if we do that. We, as fraud examiners, no opinions of guilt or innocence. We're just providing evidence. We need to keep everything simple and easy to understand. Don't use fancy words. Don't try to show off how smart you think you are. Keep it very simple. Everyday English. Keep the words short. And then use straightforward active voice rather than kind of messy passive voice. That kind of gets at the whole idea of simple and easy to understand. Passive voice can be wordy. It can be indirect. I didn't want to put it in there, but there are some good examples on page 14 of section 10 of active versus passive voice. Active voice would be John Doe wrote the report. Simple, straightforward, right? Passive voice would be the report was written by John Doe. Simple enough, but a little cluttery, right? Another example of passive voice. Most instances of fraud are reported by coworkers. All right. A better way would be coworkers report most instances of fraud. It's just more straightforward. And I've seen really good examples of really cluttered up passive voice that gets really hard to understand. So we want to keep it simple. Conclusions versus opinions. We already said we do not want to state any opinions in here about guilt or innocence. So conclusions versus opinions. A conclusion is going to be based on observation of the evidence. Conclusions from the examination should be self-evident. They need not be pointed out. If it's not obvious, the report might need to be clarified to where it is obvious. Assuming facts without sufficient evidence obviously is not proper. Now, opinion, though, calls for interpreting the facts. That's not what we're doing. We need to avoid stating any opinions of guilt or innocence. However, if you have opinions regarding technical matters, that's permitted if you are qualified as an expert in the matter. We just don't want opinions about innocence or guilt. Page 7 has a couple of good examples on proper versus improper ways to do things on conclusions or opinions. So here's improper. This is improper. I interviewed the suspect on January 5th, and he claimed to know nothing about the transactions at issue. However, I later learned that this claim was false. On February 11th, I interviewed the suspect again and showed him fraudulent invoices of the transactions that he wrote his initials on. The suspect initially lied, claiming that while his initials were his markings, he would not have approved the invoices if he knew about the nature of the purchases. However, after showing him additional evidence that he knew about the nature of the invoices, he confessed to the truth. His written confession is attached. It is my expert opinion that the suspect is culpable of a fraudulent crime. All right, so that's a mess. We don't want to do that. So they have, in contrast to all of that, proper ways to have done that. The first sentence they rewrote as, I interviewed the suspect on January 5th. There's no change there. But then they say, and he stated that he had neither approved nor known about the transactions at issue. All right. They rewrote that. The first one said he claimed to know nothing about the transactions at issue. That's not a good sentence. Obviously, he knows something. At a later interview on February 11th, I showed the suspect invoices for the transactions, which each had 3 handwritten letters on them matching his initials. The suspect then stated that he had written his initials on each of the invoices, but that he would not have approved them if he knew about the nature of the purchases. After showing the suspect further evidence I had collected, the suspect confessed to approving the transactions, knowing at the time that they were improper. His written confession is attached. So you can see the difference there. I know we went through that quick, but if you went back and reread the improper one, there's a lot of just unnecessary things there that could kind of get you in trouble. The proper example there is just, here are the facts. If you don't know what I'm getting at here, that's your problem. You should know, based on what I'm saying, what's going on. That way you get the same point across, but you don't say anything about, in my opinion, the suspect is culpable of a fraudulent crime. You definitely don't do that. You don't have things like the suspect initially lied, claiming that, well, just say the facts and let the court or whoever gets hold of it determine stronger things like that. Standard format of the examination report. We want to include a background. Why was the examination conducted in the first place? We want an executive summary, an overview of what was done and the outcome. This is a little bit similar to an audit report or an audit engagement deal. The scope. Determine why money was missing from a bank account might be an example, or determine whether inventory was misappropriated. What was the scope of this? So an audit report would tell the scope of the audit. Our fraud examination report is going to tell the scope of our examination. So why was it conducted? Overview of what was done in the outcome. What was the scope of this thing? What was the approach we took? These team members were involved. We did these procedures. We interviewed these folks. We did this and that. Our findings. This is going to be a longer section. These tasks were performed. This was found. A summary. Impact. How was the fraud affected the organization? Recommendations and follow-ups if you deem that necessary. Those are the types of things in a fraud examination report. So that wraps up investigation. Investigation's a really easy exam section with a little bit of preparation. You shouldn't have a whole lot of trouble passing that one. A lot of everyday stuff, a lot of common sense stuff, a lot of things you can reason through. So pretty easy little section that we have now wrapped up.